Goldfields has mines in Australia, Ghana, Peru and South Africa.
South Africa, of course, being the South Deep mine, which is out to the west of Johannesburg. It was the one South African asset they kept. Remember, they took all the rest of the stuff and shunted that into Sibanye. But it's now more of an international player, with the South Deep being a fantastic asset, although very deep underground.
Market cap 48.5 billion rand, a PE of 39.5 and a dividend yield of 1.2%. That deep level mining is the concern with South Deep, and certainly safety concerns coming to the fore.
Yeah, absolutely. And something I suppose we should have talked about and we haven't yet is just the difficulty of gold mining as well. I mean, especially in South Africa around, electricity. I mean, okay.
Electricity supply, labour.
Labour, electricity supply, exactly right. I mean, it's not an easy operating environment. Also very, very volatile currency, making sort of your earnings very, very difficult to predict as well. But and that was kind of the reason why I think Nick Holland decided, like, let's get out of here. And South Deep was, again, the grades were very good, and it was seen as the crown jewel of the old Goldfield South African portfolio, so they kept it. And it's been up and down over the last couple of years since the sale. But I mean, the most recent numbers, I mean, the production was up very, very well, and I mean that was also a fact that we haven't had those protracted strikes that we had a couple of years ago. So things looking a little bit better for the South African market at least. But yeah, it's also, looking at the cost profile of the group overall, it's a lot higher than the likes of Barrick. So still I think a lot of cost cutting that they need to do.
And Sven Lunscher is head of comms here, as Stuart Bailey is with your
And Nick Holland, of course, has been at the helm of this company since forever. Let's look at the share chart, though, because it's a little bit more raggedy than the previous ones, but it's the same kind of pattern, isn't it? Remember, to be fair to them, more than half of the production comes from St Ives in Australia and Cerro Corona and some of the other stuff that they've got.
To the point that Gary was saying, Nick reduced his South African exposure.
South Deep, though, is a tremendous asset, and I think will come online in the fullness of time. I think they've just had all of the sort of problems ratcheted themselves up. The future of the business, though, is the same. It's just to get the margins a little bit higher and hopefully to see the gold price sustain itself at that level.
But there must be better entry points then. As you have clearly put on the table, you go for Barrick, Rand Gold Resources, no debt on that balance sheet. Yeah, or am I wrong?
Yeah, it's interesting because, I mean, if you look at something like Goldfields, Barrick this year is, I think, appreciated 150%, whereas Goldfields, I think, is only up about 40. So, maybe, you're seeing that in the share price as well, that, that the market understands that there's a little bit more work to do in this one. And, I mean, I think, again, if you suddenly see, if your doomsday scenario of Trump winning comes to fruition, suddenly Goldfields will be a very profitable mine, with still a lot of production on stream, because you might cut your production to get your costs low, assuming gold price of $1,200 an ounce. Suddenly, if we're sitting at $2,000 an ounce on gold, everyone that's got very low cost, yes, they make big margins, but they're scrambling to ramp up production, and a lot more.
We need to call this. Paul, do you want to add any additional information before we call it?
We've covered what we need to, so I'm going to go not out on this one.
Gary?
Yeah, I'm just going to go not out.